Good afternoon, everyone, and welcome to today's Payments Association webinar, Preparing for the Future, the next chapter of safeguarding. My name is Berenice Lamblin, and I am part of the production team here at the Payments Association. So before we get started, I'd like to go over a few things. You can submit questions to today's speakers by typing your questions into the Q&A tab of the control panel. You can send in your questions at any time, and the panel will address them during the Q&A session. You can ask questions anonymously if you do not want your name attached, and we will be moderating them as they come through. This webinar will be recorded and we'll send a link around to watch on demand afterwards. If you have any technical issues, feel free to send a message through the chat box to Aisha Waris from the Payments Association. I would now like to introduce Alison Donnelly, who is the Director and Head of Payments at FSCom and lead of the Payments Association Regulatory Workgroup. Alison will lead today's panel. Hope you enjoy. Over to you, Alison.
Thank you, Bernice. Thank you very much. This webinar is about safeguarding the next chapter. It's a very important subject with just over 3 months left until the new rules come into effect. Safeguarding should very definitely be featuring at the top of most payment and e-money institutions' to-do list. It should be featuring heavily in management information and, of course, board packs. So I'm delighted to be joined by this very knowledgeable panelists today. And we're going to discuss what exactly should be those actions on the to-do list. So we have, and I'll apologise now if these names are going to be said in my accent rather than authentically, but we're delighted to have Jane Moore, who is the Head of Payments and Digital Assets Department in the FCA. And I think we can fairly credit you with being the architect of this change. Jane, full responsibility there. We're also joined by Nick Botha, who is a payments and reg tech specialist at our sponsors today, Autorec. Thank you for joining us. Conrad Chavez, definitely not doing your name justice there, but you are the Group Director of Compliance at the e-money institution Tide, and so you're going to be bringing us our in-house expertise and input today. And Nicola Gertie, who is a partner at PwC and an expert in CAS auditing and leads the very sizable team there. So thank you very much for joining us today. For me, I'm a payments regulation specialist and director of the compliance maturity specialist from FSCom, and also a newly appointed member of the Payments Association Advisory Board. So without further ado, let's launch in. Jane, this question is going to go first to you. Some e-money institutions and payment institutions have been subject to the safeguarding expectation for a few years now. Now, FSCom's analysis of the audit reports that we've been doing very definitely shows that there has been year-on-year improvements, but nonetheless, there's still a sizable majority of those firms who have significant findings in their yearly audit. So I don't think the fact that something had to change is a surprise to anyone. But what I'd love to hear from you is why going all the way to CAS is the right solution.
Thank you, Alison, and thank you for the Payments Association for inviting me, and for Autorec for being in partnership with the Payments Association for today's webinar. Safeguarding is so important, and I'm just going to underline that to start with. Payments are fundamental to the UK economy. They're essential for businesses to function, and people have to trust that their money is safe. So that's where safeguarding comes from, and that's the overwhelming message that we have. As you say, Alison, audits have been getting better. There has been improvements across the sector, and you will have seen from the FCA's Dear CEO letters that there has been some improvement, but there is a long way to go. Now, taking a look back, the safeguarding rules have been in place for some time, and they came in the payment services regs and the e-money regs years ago, and firms, I think, have been putting more focus on them, which is great, but they haven't been getting them 100% right. And this really comes into focus when firms fail. And if you look at firms that failed between 2018 and 2023, as their figures I have to hand, there's been an average 65% shortfall in safeguarded funds. So firms aren't doing something right. And so there's been calls for for us to put out more guidance, to clarify the rules. And so as we reviewed the safeguarding rules and we looked at the practices, we spoke to a lot of people and we put out our consultation, we wanted to get the balance right between giving a prescriptive framework, recognising the business models that are in practice and the safeguarding practices that happen, and fundamentally helping firms to protect people's monies when they're holding them. At the moment, in 2024, the figures I have again, there was £26 billion worth of e-money funds. There's £6 billion pounds safeguarded daily by payments institutions. That's a lot of money. And so as the FCA, we want people to be able to trust the firms, as I've said, and there to be consumer protection, there to be market integrity, and for the regime to work to provide that protection. And so that's why we've gone with the proposals that we have. We consulted quite extensively. We received 85 written responses, and I've spoken to a huge number of firms and stakeholders and consumers across the industry. And I've taken something from each and every conversation. I'll take the opportunity now to say thank you for rocking up to date, but also thank you for the input you've had to the process, to everyone on this call. And we have we've changed our proposals in line with the feedback. We've taken on board comments, things that weren't quite workable, that weren't workable at all. And we've put out a regime that we think gets the balance between the need for safeguarded funds to be safe and the ability to firms to implement them. We've got 75 working days until firms do have to implement them. From what I say today, the key message to take from me is that these rules do come into force on the 7th of May. That is just over 3 months, 75 working days, and we expect firms to be focusing on changes now to get things right for when this regime comes in.
Thank you, Jane. Perhaps we could look at what aspects of the rules do we think will make the biggest impact for firms? And Conor, perhaps you could start with that point.
Yes, happy to. Thanks, Alison. I think, as Jane was saying, right, I think there's some very clear expectations, and hopefully, the majority of the firms are already well within their preparations, let's say, for the new regime. I think one of the things perhaps worth calling out is the new shift towards a more time-critical execution. I think, we will see that the regime brings a number of very explicit timing requirements, either when it comes to reconciliations or keeping your PAC up to date, your resolution PAC up to date, making sure your record keeping is at its best, right? Always up to date as quickly as possible. So I think there's a shift between, firms who perhaps historically looked at safeguarding requirements as something they will look at periodically or perhaps even once a year when the time comes for the audit. And I think this shift now is more into a continuously review of all the requirements. I think perhaps the challenge may not be necessarily with the documentation itself, but just having that operational discipline to keep it up to date in a continuously manner. I think that's the change perhaps of mindset that firms will need to go through and ensure they have the right frameworks in place and the right ownership and the right culture in place to support that change. That's what I think is one of the biggest, just going beyond just the tick the box compliance, right? I think by now we all know the rules, we know what needs to be done. But that's I think that perhaps invisible challenges, right? That would be all for firms to be considering and preparing for as well.
Yeah, I mean, maybe if I just add from unsurprisingly from an audit perspective, I completely agree with everything that Conrad said. I mean, we've seen, the CAS regime evolve over the last 10 years or so. And certainly to the points that Alison and Jane made earlier, payments firms are a little bit, earlier in the cycle now. So there's a way to go to really uplift controlled environments. But we've seen success in the CAS world already. and therefore applying a similar regime and incorporating it into the CAS handbook makes perfect sense. I do think there's lessons that can be learned from firms who did already have to implement the legacy, if you like, or traditional CAS chapters. And I think to Conrad's point, all of that piece around, making sure that you've got things documented is really key. Certainly from an audit perspective, it's not just about having controls and things in place and executing them. It's about making sure you can evidence that you're executing those controls as well. And I think there's a real opportunity for firms to make sure that it isn't just that tick box exercise. So some of the lessons I would say could be learned are things like, don't think of this as just a compliance exercise. It works best when the business works well with compliance. And it's not about implementing controls for the sake of compliance. It's about thinking about, well, what's the right thing to do for our business model, and how does that come together, and how does it obviously achieve compliance? But I think it's about bringing everybody on that journey together, rather than having compliance sort of in a silo, trying to implement processes and controls that comply with the rules.
If I may add to that, because I also completely agree, and I think one key word you mentioned, Nicola, was around not doing this as a siloed implementation. I think, again, in the spirit of achieving the underlying objective of the change, one thing key as well is for firms to consider how does that safeguarding project actually impact other frameworks that firms may have implemented, right? So things from perhaps their instant process to the wind down plan and other, let's say, supplementary and surrounding frameworks that may not be, the name of the regime is a safeguarding regime, but that doesn't mean that, nothing else within the firm will need to be touched, so that the firms can reach that, again, the underlying objective, right? What is, ultimately the FCA, but also the firms themselves, the industry, what are we trying to protect? And we might be changing now some safeguarding frameworks, but we need to also consider, what else do we need to look at to support those primary changes and get to the point that, again, to the ultimate objective of the changes.
Oh, and where do you think there's a variety of changes, isn't there? There's things in the rules that are simply codifying what's already been expected. Yeah, we say that in the context of, we know that there were many firms who were not doing what they were expected to do, but also ones that we haven't been tested at all because they haven't had an audit because there was no expectation. So I'm just thinking of many of the payment institutions that weren't expected to have an audit. So they're going into this fresh. So they may have upticks just in the regime at the moment, but we've got resolution packs and reconciliations, record keeping. Where do you think, your experience with firms at the moment, where do you think the real crunchy bits are? Or do we think it's sort of back into the basics of what needs to be safeguarded? When does safeguarding start?
I mean, I don't mind sharing a couple of initial thoughts, and then people can chip in, because I mean, there's lots of different things to consider, aren't there? I mean, things like reconciliations can be inherently quite complicated, and so having a good plan in place as to how to address those rules, some of which are new in the regime, I think is going to be very important. I think some of the other points that you mentioned, around things like, is it the kind of back to basics type stuff, or is it something else? I think probably both to certain extents, because I think there is this piece around, what is the perimeter of your safeguarding portfolio and things like that, which can be quite judgmental, actually. So it's not always straightforward. So to the point around making sure that you've got robust controls and things in place, having that really clearly documented, thinking about where you are making significant judgments, making sure you've got the right people involved in those judgments, making sure you've potentially got, governance involved in making the judgment in the first place, but also then keeping your documentation and rationale as to why you've made that judgment and why you think it's appropriate, I think is key. And a number of firms will already have that, but perhaps, as you say, firms will be at different levels. And then I think there's then sort of the operational piece, and again, I talk a little bit from an audit perspective, but one of the areas that we often see challenges at firms is things like technology. So somebody in compliance or the business might not know exactly how all of the systems and things are working and what controls are needed to comply with the rules. But actually, and particularly in this market, I think firms are so heavily reliant on technology. so having really clear understanding of the end-to-end processes and what systems are involved and how those systems are working is really important for you to then be able to make a judgment as to whether safeguarding is working appropriately off the back of that. So yeah, I mean, there's, as I say, there's probably lots of things we could talk about on this topic, but a couple of initial thoughts there.
Fantastic. That sounds like a good segue for Nick to come in on the reg tech solutions.
Yeah, thanks for bringing me in. I was about to jump in anyway. I think just a point that Conrad made, and one word that stuck out to me there, absolutely, and having conversations with clients routinely on this topic is the idea of culture. It's a cultural shift. As Nicola was speaking there, it's not just considering this in isolation of everything else that happens. So I think I would be a bit skeptical, Alison, to your question around, do firms in the sector need to go back to basics, say what is safeguard or what is not? Because the applicability to not just the services and products that you're offering to your clients, but how your business operates. And then, I mean, there's a huge reliance on technology. I completely agree with Nicola. And I think one of the biggest concerns I have for the industry is, I mean, most of these firms, the whole idea is that they're making, their revenues from transaction volumes, and transaction volumes are skyrocketing. I mean, we've consistently seen payments firms and e-money firms transaction volumes go up. And the effect that then has on the technology stack that underpins these processes is going to be hugely important to consider. And these are some of the discussions that we have around, not just how technology is going to support these clients in terms of being able to do reconciliations and safeguarding returns, things like that, but also the underlying infrastructure, the cloud facilities, the cost of processing these transactions and having the ability to do so in an effective way. So yeah, I think I would probably lean more towards how this is applicable to your firm and the services that you offer, rather than maybe going back to basics and just simply looking at, the headline, are the funds in there, are they not in there? Because I think there's a whole lot of intricacies within the payment space that are applicable to safeguarding.
Jane, is there a part of, sorry, you were going to say something. I'll let you go first.
Thank you. I would like to jump in there on two things, actually. The first is I entirely agree that there should be a culture of compliance across every firm, and it shouldn't be limited to the compliance team. It should go across the whole firm. We need firms to comply with the regulations, all of them, and really deliver consumer protection, deliver market integrity, and deliver services to their customers. The second thing is on the back to basics. Now, whilst I agree with Nick, there's lots of potential technology solutions. Firms should look at what's right for their own business. They do need to get the basics absolutely right. They need to nail what are they holding for whom and what do their records show at that point. And that's the absolute fundamental. Because when it comes to firm failures, we've seen firms that are not able to do that. We've seen some firms that do not comply with the basic requirements of safeguarding, of having those good records, of understanding what they're safeguarding for whom. And that's the absolute fundamentals. So absolutely go and explore the technology solutions, do some really great things to comply with the rules, but you have to get the basics right as well. And as well as the 7th of May, get the basics right is another of those messages that I'm going to be really pushing today, because I think that as an industry, there's been some improvements, absolutely, but we need to get every firm up to the standard where they are protecting the money and the safeguarded funds are safe and that customers trust that. And so back to basics is something that cannot be ignored as well.
Thank you. And sort of continuing on that theme about getting the culture of compliance, and the whole firm has to be involved in this. It's not just a compliance function driven piece. Actually, what I'd love to hear from both you, Jane, and Nicola, from your respective perspectives, is when you're speaking to the firms and when you're asking them, have you fulfilled all these points? Are you in compliance? Who will you be asking those questions to, and who are you expecting to have levels of detail? Will we be asking board members? Will we be asking first line? I think that would be really helpful to our payment and e-money institution members. Who'd like to go first?
So let me go first, and then Nick can come in as well. My supervision colleagues will be asking anyone. We engage with the firms at every level, and we ask for the right people to come and give us the answers. We have a data-led supervision approach, but where we are looking into potential harm, we expect there to be a responsible person who is speaking with us, and for them to have the right amount of details. Any problems with safeguarding should be reported up to the board. They should be aware of problems. They should be aware of the safeguarding procedures within the firm as well, and their compliance. So I would expect audit reports to be discussed at the board, and I would expect breaches to be noted and to be rectified.
Thank you. And Nicola, from an auditor's perspective, in the audit, who will you be speaking to?
Yeah, I mean, look, I agree with Jane. It's important to have governance involved, right? And there's a level of expectation, I think, there around there being sufficient knowledge. And what comes off the back of that is a need to make sure there's information being fed into the board to enable them to provide oversight, so that the MI, etc., becomes, really important. And then there's the piece that day to day, we would certainly in an audit, we'd expect to speak to people, to be honest, across all parts of the business. We certainly don't only speak to compliance or the safeguarding team, if there is one. It's a case of speaking to individual control owners, right? Which it might include technology. So it might include people responsible for making sure systems are working properly. It might be the people responsible day to day for doing the reconciliations, etc. And we would expect those control owners to have a good understanding of why they are doing what they are doing, and how it is ensuring compliance with the safeguarding rules. And that's where things like training and things becomes really important across the organisation, because the people doing the day-to-day have to understand why they're doing what they're doing, but so that they can comply, but also so that if there's an issue, they know that they need to feed it up and raise it, so that compliance or the responsible people can investigate it and think about what needs to be done. So I think it actually becomes quite widespread, to be honest, in terms of the number of different people across the organisation that we'd expect to speak to in an audit like this.
And Alison, just to jump back in, sorry, I've got one more thing. From the 7th of May, as part of the changes to the rules, firms will have to allocate to a director or a senior manager responsibility for oversight of operational compliance with safeguarding requirements and reporting to the firm's governing body in respect of that oversight. So there will be one person as well. They should be able to talk to supervisors, but equally the rest of the board should be able to talk to our supervisors, as should any other colleagues within the business.
Thank you. And on that point, that person then becomes a PSD individual or EMD individual, or they should already be a PSD or EMD individual, and does that matter?
So going forward, they will have the responsibility. So they will be the person. There have to be a director, there have to be a senior manager, and they will have that responsibility.
Thank you. Okay. So there's a lot of change in hand. We've talked through various levels of detail on that. Do you think, from what you've seen on the ground so far, do you feel payment and e-money institutions are sufficiently prepared at this stage? What should they be doing right now with just over 3 months to go? What's the starting point, and where should they be right now in terms of, so they know if they've much to catch up on? And what do you think are the biggest hurdles? Who would like to take that first?
So I'll start just from a very simple perspective. They should start by reviewing the rules. I would hope by now that they've reviewed the rules, they've done a gap analysis, and they're working on whatever is needed within their business to be compliant with the rules by the 7th of May when they come into force. But I don't know if one of the others wants to bring in some practical considerations that they have seen in firms.
Happy to jump in here, and I agree, right? I mean, starting with the fundamentals, the gap analysis, how does that impact each different firm? Of course, we have various levels of complexity and structures, and the rules will apply to some extent in different manners, right? For different firms, that there will be, I suppose, more or less things that different firms will have to do. So the gap analysis is fundamental to ensure that everyone is very clear on what needs to be done at the individual firm level. The involvement of the right people as well is fundamental, right? From a tone of the top, cascading down, the culture, right? The commitment from the board, the senior management, as we were saying, that's also fundamental. One of these being, again, the appointed person, as Jane was saying earlier, for the overall compliance of the safeguarding regime. Identifying who that person is, a RACI around all things safeguarding related, right? There are multiple components that feeds into that. So who's going to be responsible for what? Who is overseeing what, right? So I guess between both first line and second line, a very clear expectations of what are the requirements for those teams and what they should be doing, how prepared they are to be doing those things. And I guess touching on something we mentioned previously, right? Of understanding, just going beyond the tick the box exercise and beyond the safeguarding, how does that actually impact potentially other processes you may have in your firm? So just one example, we're going to have to have the appointment of a senior person, right? Does your HR, assuming your HR runs your annual fit and proper checks, for example, right? Do they know this person is now appointed? Do they know that that fit and proper assessment needs to consider their suitability to be responsible for the safeguarding? So it's making those kind of beyond the obvious actions and beyond the actual the obvious thinking, right? That I think firms should be focusing on. So that comes the deadline. They are relatively comfortable that they have not necessarily implemented the documents, but they have achieved, as we were saying, the underlying objective of the whole regime, right? Again, just going beyond the immediate tick the box mentality, I guess that's what I think firms are probably going to now, just under 3 months or around 3 months of the deadline. There's still time. I wouldn't say plenty of time, but there's also, obviously different firms will be at different stages of this maturity. Yeah, that's what I think they would be focusing their time now.
Thank you. Nick, is there sufficient time to get a RegTech solution in place for the reconciliations?
Yeah, I think, absolutely from our perspective, we're speaking to people at the moment that are looking to get something in, and the turnaround can be done pretty quickly from a technology perspective. It's not it's not going to require an 18-month project or anything like that to get a solution in place. So yeah, we're still working with clients to meet that deadline. I think what I would say is, just to Jane's point that she's emphasized numerous times around the 7th of May being that deadline, I think there might be some organizations wanting to see how that goes and try to figure it out after the fact to see if they pass, their audits, etc. before. And I think, before going down the route of implementing technology solutions to support, obviously coming from that solution myself, it sounds like a sales pitch, but really, honestly, I'd be skeptical to do that. I don't think that Jane and her teams and everyone at the FCA is taking that deadline lightly. That's been clear message from everyone through all the consultation papers, everyone that's worked together with the FCA. This is a firm deadline. I think this has been pushed out months and months, and I think the time has got to be now. Just last thing on the technology side, I think we've spoken quite a lot today about evidence. Evidence is a key word that we're speaking about. Another thing I'll probably just introduce is to the idea of prevention of breaches. So it's not just about, can you evidence these things? technology providers out there will be able to help a lot with the prevention of breaches before they happen. You can do your reconciliations intraday as opposed to daily as what the requirements are, just as an example, so you can identify those issues that as and when they come up. So yeah, it's not too late is probably the message from me there, Alison, to answer your question. It's absolutely something that we could support on before that deadline.
Thank you. And Nicola, I will turn to you. Is it too late to get a qualified auditor at this stage?
No, is hopefully the answer you were expecting. But what I would say is do engage as early as you can. It's always difficult doing these things late. There is a little bit more lead time in terms of when the opinions need to be submitted for this first cycle, comparative to a sort of normal year. So normally we'd expect to issue opinions 4 months after the period end, and there's actually an allowance for 6 months. So I think reflecting, some of that challenge. I mean, clearly the later that you appoint an auditor, that you do run the risk that the auditor then finds things post period end that are an issue, and you don't have any opportunity to remediate them during your audit period. So yeah, I mean, if you've not engaged an auditor yet, then definitely get in touch with various firms that can offer that service and do it as soon as possible. But a number of organisations I think will already have auditors in place. But yes, the sooner the better. But if you've not done it yet, then now is better than leaving it any longer, I would say.
And Nicola, what you might feel, maybe I'm putting words in your mouth here, but I'll do that anyway. What you might feel is being left to the last minute is the FRC's part of this jigsaw in terms of understanding what the new CAS audit standard will be like for our payment and e-money institutions. Does that leave the qualified auditors in a very tricky situation, or indeed the firms?
Yeah, I mean, look, I think it is a challenge. I think we'd always prefer to have an assurance standard that is specific to the subject matter that we can do our audits against. And I'm sure most people know there is one in existence for the rest of CAS. So the sooner that there is a standard, and I anticipate that there will be an FRC assurance standard for safeguarding. I think we also have to appreciate, though, that these things do take time. So the likelihood of there being one for the 7th of May, I would say, is very low. But I think within a year or so we should have one. I think in the interim period, what we're hoping is that there will be some sort of guidance, or at least a pointer in the right direction for audit firms, so that there's as much consistency as there can be in a world where we don't have a specific standard. And I think as a starting point, referring to the existing CAS audit, CAS assurance, standard seems like a sensible place to start, right? Because the principles of auditing in that sort of environment, I think, are equally applicable across the two.
Thank you. Jane, just turning to you there, as Conrad mentioned earlier, and obviously we're talking now about the audits, there's going to be data coming in terms of the monthly returns. Are you speaking to firms now about there's implementation for safeguarding? Are you speaking to firms now about how they're going about it? Or will you be sort of waiting until you get the monthly returns, or indeed the audit reports, which could be how many months down the line?
So I'm going to just clarify the number of months down the line to start with, and then I'll talk more about what we're going to do with the data when we're talking to firms. So just on the dates, I've said the 7th of May, I'm saying it again, that's when the rules come into force.
And so you're expecting people to have everything in place by the 7th of May?
If I hadn't made that clear. And then the first monthly return will be due within 15 business days from the end of June 2026. So that's 15th of July for firms that are open for business 7 days a week, and the 21st of July for firms that are only open for business 5 days a week. Then the first audit period, the last date that it can end, is the 13th of May 2027. So that's 53 weeks after the rules come into force. So if a firm is subject to the audit rules, that is 13th May. And then, as Nicola said, there is 6 months for the firms to submit that audit report to us. So the latest date, which the FCA should receive the first audit report from firms, is the 13th of November 2027. So that's when the audit reports should be coming in. It's up to the firm to determine when the right end of year for them is. So as long as it's within that 53-week period. So I expect there to be audits being received into the FCA over the course of the next year. And up till the 13th of November 2027. If you haven't submitted it, or it's not submitted by the 13th of November, that again will be a breach. So as part of the changes to the safeguarding rules, we're getting in a lot more data. We're getting in monthly returns from firms that will give us a much better idea of what's happening across the industry. We'll be taking trends from that. We'll be using it for firm-specific issues that they come up, and we will be reviewing that data as it comes in. It allows us, and in the CAS world, to have a good view of where money is, where it's safeguarded, and we're looking forward to having that wealth of data for the payments world too. When firms are in trouble, it gives us a great understanding of where the firm is, and whether there's potential contagion should that firm go into an insolvency process. Audit reports, I'm using the analogy with the CAS world, they're all reviewed. There's been, over the years that they've come in, there's been a huge number of breaches highlighted, with some issues, serious issues coming out, some less serious issues, and we look at every single one that comes in and we take action appropriate to that individual firm. And so we'll be doing that as well. Now, before the rules come into force, we are engaging. We're engaging through webinars such as this. We held our own webinar in November. For anyone who's interested who hasn't seen it, it's on our website. And I've been rocking up with my team to lots of different places to just raise awareness, to answer the questions that we can answer, and just help the industry get into the right place for these rules to come in. Supervisors and colleagues have been doing exactly the same and been working with the firms just to make sure that they are on track and aware of the changes and are taking action to bring them in. We'll continue to do that. We want this industry to safeguard funds rights. I've said on a number of occasions, so we've done the safeguarding rules in 2 stages. We've done the supplementary regime and the post-repeal regime, where we, for the post-repeal regime, suggested a statutory trust. If the changes that we've made in the supplementary regime get us to a state where firms are doing this right, money is protected, then we won't have to do anything else. I would love for firms to absolutely nail the changes now so that that's it and money is protected and we don't have to make further changes in the future. We're not going to make those changes without another consultation if we need to, and we will engage right, left and centre if we do, because I know that there are strong views across the industry which I need to understand in much more detail before we make any form of changes again to the regime. So we are engaging. In answer to your question, we are engaging now. We will continue to engage. If firms have got problems, raise them with your supervisor, because if we don't know about them, we can't help. And it's much easier to come to us now and say, this isn't going as well as it should be. If it's not, I hope it's going fantastically. But if it's not, come and discuss it with us so that we can come up with a solution together.
A couple of points from that. So on the last point there, I know this is hard to imagine, but there might be firms that are saying, okay, we're going to have a day 1 and a day 2 position because we're not going to be able to make it for the 7th of May. And so we're going to have to reprioritize. In that situation, I think what I hear you saying, and you know, this is the kind of advice we'd be giving anyway, it's far better for them to come and make that clear to you now.
Come and talk to your supervisor. If you're in a situation where you might not be ready or things aren't going to plan, come and talk to us. It's much better for us to work with you than be surprised that things are going wrong. And if things go dramatically wrong, it is a much better situation so that the supervisors know what's happening, are engaged with the firm as they go along.
Marvelous, thank you. Another point was right at the beginning, you mentioned about the monthly returns when you expect them to come in. You talked about when the business is open for business. So there's two options, because you might be a Monday to Friday kind of business, or you might be a 24/7 kind of business. Now, some businesses we know are 24/7 for their customers, but actually Monday to Friday for their staff. Where do you sit on that one?
So there's a number of things to sit in that. The dates I set out is the number of business days after the end of the June 26 when that monthly return is to be submitted. So they must come to us. We have, though, in the rules, and during the consultation, we proposed that reconciliations were conducted every day. We received a lot of pushback to that, a lot of feedback, and we have changed that to there not being a requirement for weekend reconciliations. And there was a number of reasons that firms raised with us that we were comfortable with that. Firms do have to know what money they're holding for whom at all times, though. So there is a fundamental basic, but there is not the requirement to do weekend reconciliations and move money that goes alongside it. And that was something that came up in the feedback, and we did make a change because of it. So I think the date of the first monthly return is something for the firm to work out, but I think the key point there is around the reconciliations.
Wonderful, thank you. Another point that came out, sorry to, and guys, other panelists, feel free to jump in as well. The other point that came out for me from that was the monthly returns. You're going to get information from firms. Hopefully it's good information that you get, accurate, correct, but it might not necessarily be. Would that be fair? Possible? It's possible. It's at least conceptually possible that the information may not be of the sufficient quality and standard. How will you pick that up?
So we will be looking at the trends coming out of the monthly returns. So we will look at them over time, and we will see if there are spikes that look wrong. We'll also have our colleagues looking at the returns, and if something looks a bit odd, then they'll query it. And so whilst I hope that everyone is setting up systems to fill in the monthly returns as best as they can and take responsibility for sending the data to us, and they will be sending data to the FCA, to the regulator, so I would hope it's of good standard. But if there are mistakes in it, supervisors will pick it up. And equally, if firms realise that they've submitted something that's wrong, please correct it and reach out to us to explain it.
Thank you, strong message there. Clearly, there's a lot of change coming. How do we think this it will sit for the rest of the industry? How will it evolve? How will payments evolve because of the changes to the safeguarding regimes? And perhaps, Nicola, could I turn to you for that one?
Yeah. I mean, I can give a start. I mean, I suppose the real aim here really is building trust, right, within the industry. As I can't remember who said it now at the start. It's, there's so much money going through these payment firms, and therefore it is really fundamental for everybody that it's an infrastructure that can be trusted. So I think there's a real piece here around trust within the industry, and an opportunity, I guess, sort of what I said earlier, for firms to implement, where they haven't already, processes and controls that comply with the rules, but doing it in a way that thinks about holistically how their organisation is working and what is the best way for them to be managing payments and safeguarding, and looking at that across the organisation as a whole, rather than back to probably the silo point a little bit, trying to avoid that.
Wonderful. Thank you.
I think if maybe just a point to raise there is a couple of conversations that we've had is around, is this red tape gonna, not allow for future growth, different developments within payments, new payment methods, different payment rails? And I have a completely opposite view to that. I think that's absolutely not the case. I think to Nicola's point there, and Jane's, highlighted this numerous times, is around trust. And I think trust can be used as a competitive advantage in this industry. I think, somebody might prefer to use a payment firm that has ticked the boxes and have best in class technology and safeguarding solutions and processes in place, rather than a nice flashy app that they can access at any point in the day. So I think using this as a competitive advantage is absolutely a key message, not just to your stakeholders internally, but can be used, as key marketing messages to go out to your potential clients.
Wonderful. It's a good news. Panelists, I am now going to turn to questions that have been kindly submitted by our attendees. The first one is, and I think Jane's, most of these you might be wanting to pick up as well, but obviously open to everybody. The revised approach document appears to clarify that payment institutions need to safeguard funds, even if the value has been sent to FX liquidity providers for currency conversion. Have we understood that correctly? Are we basically saying all FX where there's a payment instruction needs to be safeguarded?
So I'm going to do the horrible thing a regulator does and say, can I take that one offline? Whoever's submitted the question, please do reach out to me and I'll make sure that I get a response to you.
Thanks, Jane. That is one that I've heard quite a few times. My perspective is I don't think you have actively changed your approach on FX and payments and when those could be combined and when they're separate. But I think that would be a really useful one for clarification for everyone. Thank you. A question regarding managing safeguarding funds under the regulations in respect of when it's covered by the insurance provisions. This questioner is asking, are there any proposed changes to the insurance provisions? Which, Jane, would you like to answer?
So that one I can answer. Right, so firms can continue to use the insurance and guarantee method of safeguarding. We haven't changed it. But what we have done is replace the existing guidance with new rules. And those rules cover that there must be no condition or restriction on the prompt paying out of the insurance or guarantee, except the certification of an insolvency event. And payments firms will be required to take the following actions no later than 3 months before their insurance policy or guarantees expires. So those are: first, a firm must decide whether it intends to continue using the insurance or guarantee method and notify us as the intention. Second, if a firm does not have a replacement or renewal in place, it must submit a plan to us saying how it will move to the segregation method if the insurance policy or guarantee is not replaced or renewed. And third, if a firm cannot safeguard all relevant funds through segregation, it should consider its financial position, including whether it's appropriate to place the firm into a process under the Payments and E-Money Special Administration Regime or an Insolvency Act procedure, so that a claim can be made under the policy or comparable guarantee before the cover lapses. So in summary, you can continue to use the insurance method of segregation, but you have to be sensible about what's coming up. If you're coming to the end of your policy and you haven't got a contingency plan in place, that's a problem. So you have to talk to us and you have to get a plan to either segregate the money if you don't have a policy, or to get a policy within that period before your policy lapses.
And of course, we expect that the insurance providers will be alert to these changes and will be equally enthusiastic and committed to facilitating whatever they need to do in order for this to continue. Is a very important addition to the range of ways for safeguarding. Thank you. Now, there's another very important question about the FRC's development of the audit standard, which we did cover to the extent that we don't have an update as to when we can expect, when exactly we can expect the audit standard to be published, but we're hoping that there will be something published before the start of the regime. And the next one is, will the FCA still be supplying a sample template for the monthly return, and when can we expect that?
Well, that's a good question that I will have an answer to in just a second. Give me a second.
Of course, of course. The monthly return is included in the PS 2512, wasn't it? 11, 12.
12. It's PS 2512. But I believe that we were going to put something on our website that allows firms to fill it in offline. But I just need 1 second to find out when that will be available. This might be something that I need to follow up with afterwards as well, though.
No problem. It is a popular question, so people will be very keen to have the answer to that one. Thank you. In fact, it's very, very popular. Okay, and another important question. Given the impending deadline and average determination times, will FCA authorisation colleagues expect new applications submitted today to present safeguarding arrangements in line with the new requirements rather than today's? And of course, we've got applicants who are already in flight and those that are about to submit their applications. What are they expected to be providing as part of their application pack in relation to safeguarding?
So firms will have to demonstrate to our authorisation colleagues how they will meet the new safeguarding requirements. For those that are in flight, the best thing is to talk to their case officer who's assigned to assess that case to understand what they need for the application.
Fantastic. Thank you. Thank you very much. Folks, I'm now going to, in conclusion, ask you all to give me your sort of top message, the key thing that you want to get across to all the listeners here today. What message do you want to pass on about the safeguarding regime? And Conrad, can I start with you, please?
Absolutely. I think to me, coming from a firm perspective, right, is try to understand how the new regime apply to your specific firm, to your specific business model, and understand, the underlying, as we kind of, I feel like a broken record, but the underlying concern from the FCA and the wider industry, right, and the objective, and how do you feel this best applies to your firm, and go from there. I think we touch on evidence as well, and being able to document the rationale of all of these, which I think is particularly useful when in future conversations with your supervision team, with the FCA, you can demonstrate that rationale. You can provide a context about why did you do what you've done and the reasoning behind it, and then you can evidence that you understand the underlying objective and you have acted accordingly. I think that is more useful for firms to spend time on rather than to try to perhaps find a one-size-fits-all template of say the resolution pack, for example, or try to find or to copy processes, right, from other firms or whatever it may be. Because you'd find that this may sound like a good head start, but it's going to very quickly run into problems because then safeguarding project will probably not follow suit, right? So I guess the key message to me is, again, do the gap analysis, but do it specifically to your firm. Understand what you need to do, who's the best person to do it, what are the resources that you need, and go from there and implement and evidence. Sorry, I feel like I'm saying 7 key messages, but yeah, it's kind of all combined to the same one. Make this very tailored to your firm, based on your reality, your business model, and I think that is a good start.
I think that's lovely. Wholeheartedly agree. Really tailoring it, understanding it in your business, and of course, then whatever position you come up with, it's been thought through, and therefore, if you do have to find yourself speaking to the FCA about what you have or haven't done, you can at least argue your case and show how you've done what you were doing out of very good intentions. Thank you, Conrad. Nicola.
Yeah, I mean, look, I agree with Conrad. I think gap analysis really, really key. And then alongside that, I would say make sure you document it, make sure you document those judgments, make sure you work together as an organisation. So don't do it in silos. Make sure that everybody's on the same page and moving in the same direction. And then if there are issues, I think, communicate and ask about it, whether that's your auditor, whether that's the FCA. Just the earlier the issues are discussed, the more time there is to try and deal with them. So I think early communication key. And then I suppose the other takeaway is, I don't know whether you mentioned it, Jane, actually, it's 7th of May. Be compliant.
Fantastic. So plenty of stakeholder engagement involvement, get everybody talking now. Good to talk. Nick.
Yeah, I think just key message for me is try and make this easier for everyone. Your stakeholders internally, your auditor. Please don't be relying on spreadsheets that you're submitting to Nicola and Alison and Jane. It's very messy and difficult, and there are solutions out there that cover the full end-to-end spectrum. It's not just, there's reconciliation solutions, but then there's safeguarding solutions. So, my advice, we've seen a lot of success in the CAS space over the last 10 years of firms moving to technology solutions. I think the sooner you can, have that mindset and less reliance on humans and spreadsheets, I think you're going to make your team's lives a lot easier and definitely your auditors' lives a lot easier. So that would be my advice.
Good automation will can make things so much easier and more reliable. Of course, making sure that everybody fully understands what they are and what they have to do if something goes wrong. Thank you, Nick. And Jane, we save the last word for you. Is it 7th of May?
I'm going to finish on 7th of May, but I'm going to start somewhere else. I think that this period in the payments industry and things that are happening in the payments industry at the moment are so exciting. I think that there's innovation. I think there's new ways to pay. And I'm really excited to see where we can go as a payments ecosystem in the future. So the safeguarding rules, they're designed to help. They're designed to give enough information and rules in place for firms to get safeguarding right. So we need to get the basics right. Firms need to safeguard. Clients need to be able to trust that they'll get their money back if something goes wrong. So I just want to say, implement by the 7th of May. Any problems, talk to us, and let's come together and build a really fantastic payments ecosystem that is compliant with all the rules and brings growth to the UK.
Fantastic. Confidence, let's build confidence in the sector. Consumers confident, and we have an innovative, and it's an exciting time to be part of the payment sector. And thank you all very much for your contributions to the panel. I think this has been a really interesting and helpful discussion. I think we've got some great clarity on certain points, particularly on the 7th of May. And to our members, over to you. We look forward to helping you along the way. Thank you, everybody.
Thank you all. And thank you to all of our speakers for your really insightful and interesting conversation. Thank you everyone for attending today's webinar. If you have any other questions, please contact Aisha Waris at aisha.waris@thepaymentsassociation.org. There is also a QR code up right now for a short feedback form on the webinar. Would appreciate if you could complete it. You will also be receiving the form by email shortly if you wish to do it later. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of the Payments Association and our speakers, thank you for joining us today and have a great rest of your day.